Well, the major averages are ending the week in a positive territory following a strong jobs report that suggests the economy is still humming. Will this data give investors a reason to keep the rally going? Joining us now, right here on set, senior fellow at the Council on Foreign Relations and former Bridgewater Associates Chief Investment Strategist Rebecca Patterson. Rebecca, welcome. It's great to have you.
Great to be with you guys.
Let's start right there. Does this market melt up with the S&P and the NASDAQ at record highs? Does it make sense?
Markets move on what's not priced in. And what was not priced in this morning was a better than expected jobs report. So I think given that upside surprise on the labor market and relief that the economy is holding in there, yes, it makes absolute sense that the market's higher today. But I do think it's important if you go under the hood of the jobs report, it's not as good as the headline. We only saw 74,000 private sector jobs. That's the slowest job growth so far this year, and less than half of the industries in the report had job growth. So if you look at the cyclical part of the economy, the labor market is continuing to slow.
So we just talked about it with Rick, but does this take even the slightest possibility of July off the table? And if it's taking it off the table because the data is better than expected, is that actually a good thing?
Well, yes, it takes it off the table. I would be absolutely stunned to see a July rate cut. I don't see any evidence that it would be required. And I think even September is a big question mark. But yes, it is good news. The fact that the labor market is moderating, but not faster than expected, not as much as feared, that is good news. Because as long as consumers have incomes, they can keep spending. And if they keep spending, companies have revenues, and the stock market likes that.
Let's get back under the hood, though, because you mentioned that not everything is simple under there. And for years now, we've seen this bifurcation between the working class and, frankly, the working poor, and then the affluent. But now we also have this bifurcation between the young, the job prospects for college graduates, and those who have been struggling to find employment. That got much worse in this jobs report, even than it had been up to this point, right?
Yeah, and that's going to be an interesting thing to watch as we go forward. So, we're talking about jobs. The other big news today, obviously, is the fiscal package that isn't passed yet, but I think we can safely assume it's going to get passed soon. And within that, you do see some benefits, social safety net, taken away from the lower income households in the United States. Now, the timing is interesting. Politicians keep an eye on elections, and for example, the Medicaid working requirements based on the Senate bill don't kick in till after the midterm. So they're trying to make sure that this cohort of voters is okay economically through the midterm. But even if they have that pushed out a little bit, there's still some social safety net features like SNAP, food assistance, that could in theory go away this year. Then you have the younger cohort. They're going to be getting hit as they have student loans to pay again, and they're having a harder time finding jobs. So even though today feels good, great job numbers, better than expected, I still think we're going to have a significantly slower economy in the second half of this year.